Good evening, this is Bizworld and I'm Adrian Seet. Malaysian crude palm oil prices will remain weak for most of the third quarter of this year after Indonesia scrapped its export levy. Plantation Industries and Commodities Minister Datuk Zuraida Kamarudin said this is due to Indonesia's quest to flush out as much excess palm oil as possible from its existing stockpile. Malaysia's benchmark crude palm oil prices rallied to record levels earlier this year as Russia's invasion of Ukraine and a temporary export ban by Indonesia tightened global edible oil supply. Indonesia this month scrapped its export levy for all palm oil products following a series of attempts to boost exports and ease high inventories. As a result, average crude palm oil prices for third quarter are projected to range between 4,800 ringgit and 5,200 ringgit a tonne. Prices are expected to rise to 5,000 ringgit to 5,500 ringgit per tonne in the fourth quarter with the resumption of the export levy in Indonesia and an expected decline in production. After seeing net foreign outflows for 6 consecutive weeks, Bursa Malaysia recorded a net foreign inflow of 191.3 million ringgit last week. MIDF research said foreigners were net buyers every day of last week. In its weekly fund flow report, the research house stated local institutions continued to be net sellers for the second consecutive week, selling 87 million ringgit worth of equities last week. Local retailers ended their net buying streak last week by net selling 104.2 million ringgit worth of equities. Top 3 sectors that saw the highest net inflows from foreigners were financial services with over 140 million ringgit, as well as technology and utilities with almost 40 million ringgit each respectively. Only 2 sectors saw foreign net outflows, namely industrial products and services at over 145 million ringgit and transport at 2.5 million ringgit. International funds, meanwhile, have been net buyers for 18 out of the 29 weeks of 2022 so far, recording a total net inflow of over 6 billion ringgit, while local institutions have been net sellers for 22 out of the 29 weeks, with a total net outflow of close to 8 billion ringgit, and local retailers have been net buyers for 19 weeks, with net inflow of over 1.7 billion ringgit. As Malaysia continues to shred pandemic pains, economic growth and real incomes has exceeded pre-pandemic levels in 2022. Now, according to Fitch Solutions, country risk and industry research, recreation and culture spending is leading the way as the fastest growing non-essential spending category. This, it said, simply indicates Malaysian consumers shifting preference to spending on experiences over tangible products. The firm also highlights clothing and footwear spending as the fastest growing essential category, as well as the strong, wider retail recovery in Malaysia. Now, this provides a window for fashion retailers to cater to consumers who have the appetite and capacity for greater fashion spending. Malaysian households will also experience significant disposable income growth this year, supporting greater consumer spending growth across all household spending categories. It said average household disposable incomes will grow by 7.2% in 2022 to reach 104,900 ringgit. Air traffic right ATR applications jumped 210% year-on-year this second quarter of 2022. From April the 1st to June 30th, MAVCOM said there was a higher application rate with a total of 32 applications submitted, comprising 28 international and 4 domestic routes. This reflected a 47.6% increase in ATR applications from the first quarter. The notable rise was driven by the reopening of international borders, coupled with airlines mapping out their international network to align with the reopening of international borders by other countries. It was also driven by airlines exploring new sectors and greater flight capacities into Australia and New Zealand by Malaysian carriers. MAVCOM approved 31 out of the 32 ATR applications received, representing a 96.8% approval rate. AirAsia received the highest number of approvals, totaling 11 ATR, followed by Batik Air Malaysia and AirAsia Rex, which received 7 and 6 ATR approvals respectively. The owner and operator of Touch 'n Go e-wallet, TNG Digital, has raised 750 million ringgit from its latest round of equity funding. The funding round was led by a new investment from Lazada Group and a follow-on investment by TNG Digital's current shareholder and parent company, Touch 'n Go Sdn Bhd. This new investment solidifies the collaboration between key segment leaders, e-commerce, Lazada and digital financial services and payments, Touch 'n Go, and thus bringing its next-level value propositions to users and merchant bases across its ecosystem. Total amount raised by TNG Digital over the last 18 months is now over 1 billion ringgit. In addition to Touch 'n Go and Lazada, other shareholders of TNG Digital include Ant Group, insurers AIA Group, and US-based venture fund Bowwave Capital. And that's all the time we have for Bizworld. I'm Adrian Seet. Thank you for watching and stay safe, Malaysia.